sige na. Now, I will be answering questions in chapter 1, but only selective. And anyway, you can just listen to the answers. At least that will augment whatever you have learned in the PowerPoint presentation. Okay, so I'll start with question number 6. And the question is, in what ways does a typical manufacturing business differ from a merchandising concern? In what ways are they similar? Okay, a manufacturer differs from a merchandiser in these ways. Letter A, the merchandiser buys items to sell, while the manufacturing business must make the items it markets. B, usually the manufacturer has a greater investment in physical facilities. C, the manufacturer will incur some costs peculiar to this type of industry, such as machine maintenance, materials handling, and inspection of manufactured goods. The two types of operations are similar in that they are both concerned with purchasing, storing, and selling goods. They must have efficient management and adequate sources of capital, and they may employ many workers. So at least we have identified the differences and the similarities of manufacturer and merchandiser. Now we go to question number 9. By the way, I am just selecting the questions in chapter 1. So now question number 9. For a manufacturer, what does the planning process involve? And how is cost accounting information used in planning? For a manufacturer, the planning process involves the selection of clearly defined objectives of the manufacturing operation and the development of a detailed plan to guide the organization in reaching the objectives. Cost accounting provides historical cost information that is used as the basis for planning future operations. So the focus of the question is on planning, involving planning operations. Then we have question number 13. What are the requirements for becoming a certified management accountant or a CMA? Now, what are the requirements for becoming a CMA? The requirements for becoming a CMA include a 4-year college degree, 2 years of relevant work experience, and passing a rigorous two-part examination. Okay? Next, we go to question number 14. What are the 4 major categories of ethical conduct that must be adhered to by CMAs? The 4 major categories of ethical conduct that must be adhered to by management accountants include competence, confidentiality, integrity, and credibility. So I'll repeat: competence, confidentiality, integrity, and credibility. Now, these are the 4 major categories of ethical conduct. Next, number 24. What are the basic elements of production cost? Now, we are talking about a manufacturing concern with production cost. The basic elements of production cost are direct materials, direct labor, and factory overhead. I'll go back to number 23. What is the difference between a perpetual inventory system and a periodic inventory? I know you have taken this up in Accounting 1101, and you have even involved questions, entries in connection with the two systems. Now, how about a perpetual and a periodic inventory system? What is the difference between these two? A perpetual inventory system involves maintaining a continuous record of purchases, issuances, and new balances of all goods by using stock cards. So I'll repeat, a perpetual inventory system involves maintaining a continuous record of purchases, issuances, and new balances of all goods by using the stock cards. Now, on the other hand, under a periodic inventory system, no attempt is made to record the cost of merchandise sold at the time of sale. At the end of the accounting period, a physical inventory is taken for the purpose of determining the cost of goods sold and the ending inventory. Now, if we have to consider the journal entries in connection with the two systems, now let's have the two columns. First column perpetual, second column periodic. Okay, transaction number one, purchase goods. Purchase goods for sale. Now, I am giving a merchandising concern, for example. So, purchase goods for sale. Under the perpetual inventory system, your entry is to debit inventory and to credit cash or accounts payable. So debit inventory and credit cash or accounts payable. Under the periodic system, the entry is to debit purchases and to credit cash or accounts payable. Now, the second transaction is sold goods on cash. Sold goods on cash. Now, under the periodic and perpetual system, you have your entries debiting cash and to credit sales. So you have the same entries under the perpetual and periodic system, debit cash and to credit sales. Under the perpetual inventory system, you have to make an additional entry. And this entry now will involve a debit to cost of sales and to credit inventory. Now take note that your debit upon purchase was inventory. So by the time you sell, to record the cost of sales, you are going to credit inventory and debit to cost of sales. You do not have this entry under the periodic system. So no entry for cost of sales, but only for sales. Now, at the end of the period, and you have to determine the value of the ending inventory. Under the perpetual inventory system, the value of the ending inventory will be determined by looking at the stock card. So the stock card will show how many units remain and how about the unit cost and how about the total cost. So it depends whether you are using the FIFO method or the average method. Now, in the stock cards, you'll be able to determine the value of the ending inventory. And likewise, in the ledger or in the T account, you can determine the value of the ending inventory as the difference between your debit when you purchase and the credit when you have your cost of sales. So the balance of the inventory account, that's your ending inventory, which should be equal to the amount or the value of the inventory in the stock card. Now, on the other hand, if you are using the periodic inventory system, take note that when you sold goods, you have no entry to record your cost of sales. So at the end of the period, what you will be doing under the periodic inventory system is to conduct an actual physical count. So you have to conduct an actual physical count in order to determine the value of the ending inventory. And based on your count, you have to debit merchandise inventory and you may have a credit to profit or loss or revenue and expense summary. So you debit to merchandise inventory and to credit profit or loss or expense and revenue summary. And at the same time, you can already close, assuming you have the end of the accounting period, you can already close the beginning inventory by debiting profit or loss or expense and revenue summary, and you credit to merchandise inventory. Now, through these entries, you will be able to determine your cost of sales. Since you already have your purchases and then you add your beginning inventory and you deduct the ending inventory, that will finally give you your cost of sales. Now, that is if you are using the periodic inventory system. But in perpetual, you do not need an actual count. All that you have to do is you look at the stock card and find out how much is the inventory balance. The same is true with the ledger. The only thing that in under the perpetual inventory system, to determine the reliability of the entries in the stock cards, at least once a year, you have to conduct an actual physical count. So conduct an actual physical count to determine the correctness of the inventory value appearing in the stock card. So at least you'll be able to check if the value of the inventory is correct or not. The determination of the inventory value, no? Usually you have to do it only for the purpose of checking and make sure that the entries in the stock cards are reliable or not. Okay, so we have the perpetual and periodic inventory system. Now, number 25. How would you define the following cost? Direct materials, indirect materials, direct labor, indirect labor, and factory overhead. Now, number 25. Direct materials, the cost of those materials which become part of the item being manufactured and can be readily identified with it. Direct materials. Indirect materials, the cost of those items which are necessary for the manufacturing process but cannot be identified specifically with any particular item manufactured, and the cost of those materials which do become a part of the manufactured product but whose cost is too insignificant to track to individual jobs. Now I'll repeat the definition of indirect materials. Indirect materials are the cost of those items which are necessary for the manufacturing process but cannot be identified specifically with any particular item manufactured, and the cost of those materials which do become a part of the manufactured product but whose cost is too insignificant to track to individual jobs. Now you have those materials to be distinguished from direct materials. Next, we go to direct labor. The labor cost for employees or workers who work directly on the product manufactured. So they are really the ones doing the manufacturing process. Indirect labor, the cost of labor for those workers who are required for the manufacturing process but who do not work directly on the item being manufactured. So if we talk about indirect labor, for that, we may have a supervisor or superintendent working in the factory, the timekeeper. These workers are really engaged also or are required for the manufacturing process, but they do not work directly on the item being manufactured. So the timekeeper in the factory, as we understand what's the work of the timekeeper or the supervisor, merely the supervisor sees to it that the work procedures are followed and the manufacturing process continues with his presence. Now, another to be defined is factory overhead, includes all costs related to the manufacturing process, except direct materials and direct labor. So, this factory overhead includes indirect materials, indirect labor, and all other factory costs. So, let's understand that the cost are incurred in the factory and they are involved in here. They are still factory costs. Only that you have to distinguish them from direct materials and direct labor. Next, number 29. How do cost of goods sold and cost of goods manufactured differ for a manufacturer? So cost of goods sold and cost of goods manufactured, how do they differ for a manufacturer? Cost of goods sold represents the total manufacturing cost of the goods sold during a given period, while the cost of goods manufactured represents the total manufacturing cost of all goods that were finished during the accounting period. So we have this very important things to consider here. In number 32, when is job order costing appropriate and what types of businesses use it? Okay. In number 32, we have job order costing is appropriate when the output of an enterprise consists of custom-made or specially ordered goods. Manufacturers such as machine shops and shipbuilders, merchandisers such as computer retailers, and service firms such as CPAs and architects all use job order costing. So repeat, job order costing is appropriate when the output of an enterprise consists of custom-made or specially ordered goods. Now we go to number 33. When is process costing appropriate and what types of businesses use it? Process costing is appropriate when an enterprise operations involve the continuous or mass production of large quantities of substantially identical items. I'll repeat, process costing is appropriate when an enterprise operations involve the continuous or mass production of large quantities of substantially identical items. Manufacturers such as chemical producers and candy makers, merchandisers such as newspaper publishers and agricultural wholesalers, and services such as hospital X-ray departments and airlines all use process costing. Number 34, what are the advantages of accumulating costs by departments or jobs rather than for the factory as a whole? An advantage of accumulating costs by departments. So in other words, using process costing or by jobs under job order costing is that the information aids provided is that the information provided aids management in achieving control of costs. With a process cost system, management can make departmental comparisons of current period costs with prior period costs and can take corrective action as needed. If costs were accumulated for the factory as a whole, management would have difficulty identifying specific sources of excessive costs and inefficiencies. The information provided by a job order cost system aids management in the determination of selling prices, the profit on each job, and cost applicable to similar jobs produced in future periods. Next, number 36. What are standard costs and what is the purpose of a standard cost system? Standard costs are costs that would be incurred under efficient operating conditions, which are estimated by management in advance of production. Standard costs are then compared with actual costs, and difference called variances are calculated and analyzed. A standard cost system is not a separate cost accounting system, but is applied in conjunction with either process costing or job order costing to increase cost control effectiveness. And the last question, if the factory operations and selling and administrative offices are housed in the same building, what would be a good cost allocation basis to use in dividing the depreciation expense between the two areas? Why would it be important to make this allocation? Square footage occupied by each of the areas would be a good cost allocation base to use in allocating the depreciation expense between the factory operations and the selling and administrative function. This distinction is important because the depreciation allocated to factory operations is a manufacturing expense that becomes part of inventory cost and eventually cost of goods sold, whereas the portion allocated to selling and administrative expense is a period cost that is always expensed in the period incurred. So in other words, we have to use square footage occupied by each of the areas. That will be your allocation base to be used in allocating depreciation expense between the factory operations and selling and administrative function. It's important because the depreciation allocated to factory operations is a manufacturing expense that becomes part of the inventory cost and eventually cost of goods sold, whereas the portion allocated to selling and administrative expense is a period cost that is always expense in the period incurred. Okay, so I hope by answering these questions, your knowledge, aside from our discussions in the PowerPoint, at least you will have more. You will have more, no? Aside from the ones in the PowerPoint. Okay, let's take up one problem here. Problem 1-7 for our discussions. So just take note, I am not going to post the solution. So just take note of the answers in problem 1-7. And 1-7. Okay, you find this 1-7 on page 61. Yes, page 61 with several requirements. So 1-7, journal entries and account analysis. So problem 1-7, you refer to pages 61 to 62. And let us answer problem 1-7. Okay? I am not posting this, but I'm not posting this, but I will just dictate to you whatever journal entries. In 1-7, we have 10 requirements. Requirement, prepare journal entries for the following. So in requirement number 1, what is your journal entry in recording the purchase of raw materials and factory supplies? Now, the question is, what inventory system are we going to use in recording purchases? Is it the perpetual inventory system or is it the periodic inventory system? In transaction letter A, it stated that only one inventory account is maintained. So let's now assume the use of the perpetual inventory system. How do we record the purchase of raw materials and factory supplies in number 1? So we now debit to materials and credit to accounts payable. Since the problem stated in letter A, transaction, that only one inventory account is maintained, so we now debit to materials and credit accounts payable for total of 55,000. Then number 2, the issuance of raw materials and supplies into production, then what is your entry? Hint, be certain to consider the beginning and ending balances of raw materials and supplies as well as the amount of purchases. Now you are given the balances on May 1 and May 31 of the raw materials account of May 1 and May 31, and as well as the factory supplies. So now we have the purchases totaling 55,000 in entry letter number 1. So our next entry will be to as required. We have to prepare the entry for the issuance of raw materials and supplies into production. For the process, we involve the beginning balance, and then we add purchases, deduct the ending balance that will give us your materials issued. So let's begin with raw materials. The beginning balance is 6,000, and then we add the amount purchased of 45,000. So that makes 51,000 minus 5,500. So we now have a difference of 45,500, which we debit to work in process materials. So for direct materials issued to production, the debit is work in process. So repeat, debit to work in process for materials, the amount is 45,500. That's taken by adding the beginning inventory of 6,000. Then we add the purchases of 45,000 minus the ending inventory of raw materials. So we now end with work in process debit 45,500. We also debit factory overhead for indirect materials. Your factory supplies, this is an example of factory overhead. So we have factory supplies, inventory beginning of 800, and then we add purchases in entry number 1 for 10,000, and deduct the ending inventory of 900. So the debit is factory overhead for indirect materials, 9,900. And since there is only one inventory account maintained, we simply credit to materials for 55,400. Okay, let's repeat the entry for number 2. Entry debit to work in process for materials 45,500. Then we debit factory overhead for indirect materials 9,900, and credit to materials for 55,400. Now this is your entry for number 2. Number 3 is the recording of the payroll. And the payroll are May transactions letter B. Incurred wages during the month of 65,000. 15,000 was for indirect labor. So in other words, the balance is for direct labor. So in number 3, The first entry is now to record payroll. We now debit to payroll 65,000 and to credit wages payable or accrued payroll. So repeat the entries to debit payroll and credit accrued wages or wages payable for 65,000. Then the number 4 entry is for the distribution of the payroll. So the payroll is to be distributed partly to direct labor. Direct labor should be debited to work in process. So debit to work in process for direct labor, and that is 50,000. Then we debit to factory overhead for indirect labor, 15,000, and credit back to payroll. In number 3, you debited payroll. Now, in number 4, you credit payroll as you distribute it. So we now debit to work in process for direct labor, debit factory overhead for indirect labor, and credit to payroll. Then number 5, the payment of the payroll. So the payroll in number 3 is credited to accrued payroll or wages payable. So in number 5, you pay. So we debit to accrued payroll or wages payable. So accrued payroll or wages payable, the amount of 65,000 and credit to cash. Next, in number 6, the recording of factory overhead incurred. The factory overhead incurred. So we now debit to factory overhead for the amount of 42,000. Letter C, transaction. Incurred factory overhead cost in the amount of 42,000 on account. So number 6, the recording of factory overhead incurred, we debit to factory overhead and credit accounts payable for 42,000. So repeat, debit factory overhead and credit accounts payable for number 6. Next, number 7, the adjusting entry for factory overhead. Stated in letter D, made adjusting entries to record 10,000 of factory overhead for items such as depreciation, credit various credits. Factory overhead was closed to work in process. Completed jobs were transferred to finished goods and the cost of goods sold was charged to cost of goods sold. So the number 7, adjusting entry for factory overhead, debit to factory overhead for various credits. So we now credit various credits, 10,000. Now the various credits may be or includes uh, prepaid insurance, accumulated depreciation. If you are certain that this factory overhead cost relates to partly depreciation, and we now have our debit factory overhead and credit various credits. Credit various credits for 10,000. Okay? So your various credits may include accumulated depreciation. So you debit to factory overhead. Thus, depreciation. And you credit to accumulated depreciation. If you are going to recognize the debit to factory overhead for some of these adjustments, that's why number 7 is an adjusting entry. Next, number 8, the entry to transfer factory overhead costs to work in process. Now, what will be the amount involved? So if we have now factory overhead was closed to work in process, completed jobs were transferred to finished goods, and the cost of jobs sold was charged to cost of goods sold. So your entry to number 8 now, transfer factory overhead costs to work in process. We now have to debit work in process, factory overhead, work in process, factory overhead. And we now have the credit to you have the credit to indirect materials, indirect labor, factory overhead paid, and factory overhead recorded. Now take note that we have the factory overhead accounts here. In number 2 and 3, factory overhead is debited for 9,900. In entry number 4, factory overhead is debited for 15,000. In entry number 6, factory overhead is debited for 42,000. And in entry number 7, it's debited for 10,000. So I'll repeat entry number 8, debit to work in process for factory overhead, 76,900, and credit to factory overhead. Okay, so let me repeat the entry. Debit to work in process for factory overhead, 76,900, and credit to factory overhead. We have the debits to factory overhead, so we have to credit this. Finally, we charge work in process. So debit to work in process, 76,900, and credit factory overhead for the same amount. The sum of indirect materials of 9,900. Then we have 15,000 for the indirect labor, 42,000 for the accounts payable, on factory overhead incurred. And the last one, we are going to close factory overhead for 10,000. So the number 8 entry again is to debit work in process, factory overhead, credit factory overhead for 76,900. Okay, number 9, the entry to transfer the cost of completed work. So transfer the cost of completed work to finished goods. Hint, be sure to consider the beginning and ending balances of work in process, as well as the manufacturing cost added to work in process in this period. So repeat, 9, the entry to transfer the cost of completed work to finished goods. Be sure to consider the beginning and ending balances of work in process, as well as the manufacturing cost added to work in process. So for the entry number 9, we debit to finished goods and to credit work in process for 169,400. 169,400. Now, these are the amounts that we are going to credit to work in process, which normally is a debit. Now, we have to credit in order to close the account. Okay, so why do we have 169,400? If you draw a T account and post work in process, you begin with work in process inventory on May 1, 3,500. So you can post that in the T account and label it work in process. You begin with May 1 balance 3,500. And then you add the debit in number 2 and 3, 45,500. And you add another debit in entry number 4 for 50,000. Debit to work in process. And entry number 8, debit to work in process for factory overhead, 76,900. And you post on the credit side the ending balance on May 31, the ending balance of 6,500. So you have now repeat the debits to work in process, 3,500 for the beginning balance. 445,500 debit to work in process for materials, 50,000 debit for direct labor, and 76,900 for various factory overhead items. These are the debits. And on the credit side, we have the ending inventory or on May 31 inventory of 6,500. So all in all, we have to credit work in process for 169,400. And the debit is to finished goods. The debit is to finished goods. Okay? Now, the last is the entry to record the cost of goods sold. Hint, be sure to consider the beginning and ending balances of finished goods as well as the cost of goods finished during the month. Okay? So now we have to prepare the entry for number 10. Debit to cost of goods sold and credit to finished goods for 168,200. So debit cost of goods sold and credit finished goods for 168,200. Now you are going to credit finished goods. Initially, this was a debit balance. Now, the beginning balance of finished goods on May 1 is 12,000. So again, you draw at the account for finished goods and the beginning balance you post for 12,000. Debit ina 12,000. And then you are going to debit 169,400. And that 169,400 is in entry number 9. Is in entry number 9. Debit to finished goods and to credit to work in process. So now you already have two debits and we deduct 13,200. Your finished goods on May 31. So that's your ending inventory. We deduct 13,200. So the cost of goods sold is 168,200. Your cost of goods sold. These are the entries in problem number 1-7, and I hope you will be able to master the journal entries. You just keep on repeating the journal entries, and what's important is you really you are knowledgeable and you master what to debit and what to credit in connection with your journal entries, no? What account should be debited and credited. Okay. Now, I just would like to let you understand the manufacturing cost flow. When we talk about the manufacturing cost flow, we are now referring to the movements of your raw materials, and then we transfer this to work in process. So you have to be guided accordingly by the pro forma journal entries. Like by the time you purchase materials on account. So transaction number 1, purchase materials on account. So your entry is to debit materials and to credit accounts payable. So debit to materials and to credit accounts payable for the purchase of materials. So let's assume we are now using the perpetual inventory system to debit materials and to credit accounts payable. We are going to use the cost of materials purchased. Next entry will be to record. Entry number 2, transaction number 2, issued direct materials to production, issued direct materials to production. Entry number 2. So the entry will be to debit work in process and to credit materials. We are now talking of issuance of direct materials. So I'll repeat, transaction number 2, issued direct materials to production, issued direct materials to production. The entry is debit to work in process for the direct materials cost and to credit materials. That will be your pro forma entry number 2. Then number 3, issued indirect materials to production, issued indirect materials to production. Indirect, your entry is to debit factory overhead and to credit materials. So issued indirect materials to production, debit to factory overhead and to credit materials. Now we have indirect materials. Next, transaction number 4, recorded gross payroll on account. Recorded gross payroll on account. So the entry for number 4 is to debit payroll and to credit accrued payroll or wages payable. So number 4, you have your payroll. Okay? So debit to payroll, credit, accrued payroll or wages payable. In number 5, charge to work in process, the cost of direct labor. So, cost, number 5, charge to work in process, the cost of direct labor. Your entry is to debit, work in process, and to credit payroll. Debit to work in process and to credit payroll for the cost of direct labor. Then next entry will be to record your indirect labor's cost. So, charged factory overhead for the cost of indirect labor. That's now entry number 5 or 6. Okay? So we now debit to factory overhead and to credit payroll for the cost of indirect labor. For the cost of indirect labor. So we now have debit, factory overhead, and to credit payroll for the cost of indirect labor. That is your journal entry for the cost of indirect labor. Okay? Next, charged other factory cost. Charged other factory cost to work in process. Charged other factory cost to work in process. So the entry is to debit work in process, and here we have a debit, no, for the work in process. Why do we debit? Initially, you have your debit to factory overhead. Initially, you have to debit work in factory overhead, I mean. Initially, you have to debit factory overhead, and your credits are various credits. So, repeat, debit to factory overhead and to credit various credits that may include prepaid insurance, that may include the accumulated depreciation, so any other credit. So I'll repeat the entry, debit to, the first entry is to debit factory overhead and to credit various accounts. So various accounts may include prepaid insurance, may include accumulated depreciation. So that will be your first entry. Then your second entry is to transfer other factory costs to work in process. So actually, you are going to transfer other factory costs to work in process. That's the time that you debit to work in process and credit factory overhead. So debit to work in process and to credit factory overhead. Okay, now the work in process account, as you can determine now, you have 3 debits to work in process. One is for direct materials, second is for direct labor, and the third is for various factory overhead costs. So first, direct material, second, direct labor, and third, various factory overhead costs. Debit to work in process. And now you are going to credit work in process for the cost of goods finished. Okay, so your next transaction is recorded cost of goods finished. Recorded cost of goods finished. Your entry is to debit finished goods and to credit to work in process. If you have a beginning inventory, now, of course, you have to post before recording the current transactions. So the next entry is to record the cost of finished goods. Your entry is to debit finished goods and to credit work in process. So debit to finished goods and to credit work in process. Okay? Now the last entry is to record cost of finished goods sold. To record cost of finished goods sold. So your entry is to debit cost of goods sold and to credit finished goods. Debit to cost of goods sold and to credit finished goods. Now, so far, that's your last entry where you debit to cost of goods sold and you credit to finished goods. Right? Now, I gave you assignments in chapter 1 with the um, exercises 1 to 7. And then for Monday, we are going to discuss the assignments 1 to 7. And then we will go to the problems. So we have now problem number 1 and number 2. We have problem number 4. Okay, these are quite long problems. And then we have problem number 7. We have already taken up this today. And then we go to problem 1-8 and 1-9. Still to continue, but I hope we can finish this on Monday. We still have the exercises. Okay? So, I hope you will study. This is an extra work, but you will benefit out of this. Before we go to Monday's discussions. Good night. Gimmick.